Okay, looks like everything's working. I'm on a bit of a delay here. Just triple checking. Alrighty. Yeah, once I get a regular, higher quality internet connection, I'll start trying to time when I make an intro and when I go live, because having that dead air right at the beginning of the stream ain't ain't so fantastic. But also, hey, check this out. I got the full camera scene going on here. So whenever I want to point and make note of something, all right, there you go, full camera. We're we're getting the show on the road. Um, dollar bears are way too early. Um, look, I know I made this call yesterday on Euro dollar, right? We close above this, right? People were pretty excited about this particular call from yesterday. I mean, this was to say the least, this was a pretty excellent call, and I did it live. It was like, how else do you want me to start doing these daily plans now? Like this is fantastic. Um, but don't run with this one day and say now all of a sudden, oh, the dollar is going to be weak for like the next 2 weeks. Like, no, like, don't get me wrong. This was a weak dollar day yesterday. Yesterday was a weak dollar day. Will today, that we're currently trading now, be a weak dollar day? Well, why don't we look at the odds before we make this decision of this overarching idea somehow that the US dollar is going to get weak for like the next 2 weeks or something? Well, looking at where things are priced at right now, if I could hover my mouse over a little zoom in here for everyone who's on mobile and needs to be able to see stuff. Sorry about that. Gotta always zoom in the trading view because otherwise everything looks like super small. And hey everyone, I see you, James Filios. Okay, so let's look at these odds. It's effectively 45, 55, 50-50, whether or not we close above or below where we're currently priced in right now. Either you're going to get your close somewhere in this area, right? Peak, around this peak in price, or you're going to get your close somewhere around here. Now, we don't really have all that much information right now. We just started the day. Other than yesterday was green. So, you know, maybe there's a bounce here on euro dollar. I am kind of interested to see what the daily looks like. You know, that does look like a good candle to start getting some kind of reversal out of this. I am on the more curious side, so I am going to pull up pivot probabilities here. Well. Also, I got to turn on the next period's pivots, so we have lines out into the future. I'm just going to look at next week's odds here. Man. Oh my god. Oh my god. Okay. Okay, I may have to take back what I said earlier. The low for the week is probably in. The low for the week in euro dollar is probably in. Oh my god. Uh man. Look at that. So this is where we said yesterday, based off those range probabilities, hey, we're probably at least going to close above this line here. And now we're looking at our probability weighted pivot low for the week. That's quite likely the low for the week. Quite likely the low for the week. So the dollar bears actually may have some gust to their wins, right? And I would imagine that we go up and away. But that would require me to go and show you the high probabilities, and I'm gonna leave that chart, you know, giving you the probabilities of where we're gonna probably top for the week in the trade group. Because remember, these are the daily plans, and these are public and free and open for everyone to see. So I'm gonna go back to the 1 hour, and that's why you should. We go ahead and bring up a couple of things. So let's see here. I wanted to follow up on the DXY. I wanted to follow up on this euro dollar. This euro dollar trade was fantastic. However, on DXY, this was my trade plan, right? I was saying, hey, 40% of the time you close above here, and assuming things effectively go sideways from here, we would close right around above, somewhere above this line. I was right on the day before, so I have one win on that. But now we can up this and say one win, one loss, streak of 0. So I'm going to try and keep track of how many times I get these calls right, how many times I keep these calls wrong. And you know what? We could go back to euro dollar and update the line over here as well as one win and a streak of 1. So let's see how many times I can get a daily call correct in a row. Now I don't really have an expectation right now on euro, other than that the low is likely in for the week. Now that you guys have seen those odds. Oh, also I remember why I turned off those next periods pivots, because they kind of get in the way of these labels right here, these range probability labels. I'm kind of interested in knowing where these probabilities lie. So 73% of the time you get your close for the day above, call it 1071, 10705. Okay. I'm up for that. Let's see here. Da, da, da. I mean, could I get a little more aggressive than that? Could I be saying something along the lines of like we close above the daily central pivot? Well, for that, let's, instead of looking at the closing odds, let's look at our high and low odds. So these are our odds of getting a low between a couple of prices. And I'm interested in right here. Oh, that's actually the 50-50 line. So 50% of your close given trading day are going to be above that. Closes are going to be below that. So actually, I think this is going to be pretty conservative here. Yeah. Definitely a close above 107 seems quite likely. What? 31 pips away from that. So I need to make a more daring expectation, yeah? How about we get our high above this line? High above. So what I'm saying here is that I'm our top for the day comes in somewhere up here. Our high for, sorry, my mic is cutting out again. I have to keep an eye on the buttons that I'm pressing, because sometimes they override each other. But what I was saying is that I'm making the expectation that the high for the current trading day is somewhere above 1075, which is roughly 16, 17 pips from here. Yeah, that's where I am anticipating that the high comes in. And the probability of me being right or wrong is roughly 60-40. So 40% of the time, this doesn't happen. 60% of the time, this does happen. And I think that's a more aggressive call than trying to say, like, oh, yeah, we'll close the trading day above this line, and we're already trading 30 pips above it. I think this is a more reasonable, like, proper forecast to be making. Huh. Let's see. No, when I use my mouse, it doesn't knock my microphone out. It's when I use a hotkey on my keyboard, like when I'm pushing my push to talk and I alt tab, or I'm pushing my push to talk and I hit the. See over here, you have to get that measurement tool that I'm constantly using, you have to hit the shift and then click. Well, if I hit shift while I'm using my push to talk, for some reason that stops my push to talk. So I have to make sure before I use my hotkeys that I finish what I'm saying or I pause. That's it. And I would just use, again, voice activation, right? To not have to deal with the hotkey situation. And the truth is that sometimes the neighborhood can get kind of loud. Sometimes the house can get kind of loud. Sometimes the cats will come in and meow, right? The good old kitty cat. I have a feeling that one of the reasons why my videos are doing so well is because I got the cat. And the cat makes an appearance every now and again. And I need to use that cat as more clickbait. That cat needs to be in my thumbnails. I got to use the cat for trading clickbait. Yeah. Alrighty. So we have some economic data here on the right-hand side. Um, let's see here. Non-farm payrolls forecast 190K. So that's roughly around the 200,000 that people are anticipating. Let's go to DXY. Okay, so DXY, that was not correct. Yes, well, actually, no. Yesterday was correct. Today was incorrect. And it looks like I can't make a forecast on where DXY is going to go quite yet because we haven't. DXY has its new daily candle in like an hour or two from now. So I can't really make a DXY daily plan quite yet, which sucks. But DXY is like 40 or 60% comprised of euro and euro dollar effectively. So I think I'm good on that front. Yeah, let's see here. What else is there? Oh, outside of my streams on Discord, I'm getting together and meeting with people doing trade plans on just whatever assets. And one of those assets I did a trade plan on back on May 28th, so roughly 2 days ago, was Nvidia. And you can see these were the little arrows that I drew. Now, what's interesting about this is that my expectation for the week was that you would go to the meme price of 420 at least sometime this week, and you could see out here, right? But we just went to it immediately in the first hour of trading today. We hit that weekly expectation immediately. Okay, I got to do another forecast, I guess. I mean, I'm pretty sure that trading is now over. I'm pretty sure trading's over now. It's closed here. Or usually for any given trading day, NVIDIA closes between. I mean, if I hide the drawings here, if I hide the candles, you can see a bump in our distribution right here, another bump in our distribution right there. usually occurs here. Usually occurs here. And unless you got good reasons for expecting otherwise, and don't get me wrong, you got like still 15, 16% of the time you close like way down here. And then actually it's only like 3% of the time you way up there. Yeah. You only get very few closing days that have data way up there. Don't know if my mic cut out there or not. I built up this habit. Okay? I built up this habit. I got to get over the habit. um but yeah, for I mean we didn't hit 420 exactly. We hit 419 and 38 cents, but for all intents and purposes, anticipating that you're going to hit 420 and then getting within a buck of it is pretty killer. But I don't know if that's going to be the look. Now that we've moved this high before the end of May, we've already hit that expectation. I'm going to have to come back and reassess my future expectations for Nvidia prices higher. Like I may have to anticipate Nvidia goes to like 460 or 440, somewhere in that range, sometime next month. Uh, but that's gonna be for people who are in the Discord. I mean, if you want me to consistently give and do trade plans on one particular asset every day, you can join my trading group for $100 a month, which most trading groups are like 2, 3, 400. You get access to the trading group, the indicators that you see here, direct help from me on how to use the indicators and interpreting them. And then there's weekly exclusive videos for how to use these indicators and weekly and monthly trade plans that are usually held every Saturday. And you'll note that the only day that I'm not going to be doing public YouTube stuff is on Saturday. That's it. The next thing I wanted to go over was the ES itself. Ooh, that hurts. Actually, where exactly did the day? Yeah, this is on the day. I'm trying to figure out, right? So that's the 28th. I'm trying to figure out when was the last time I drew this. I got to put a timestamp on these things for the last time I made a trade plan. Oh, I didn't do a trade plan yesterday, I think. Because, actually, what are these? Yeah, that's still daily. So, I'm curious why this 15 to 15, I'm guessing. That's the situation. Yeah. From with the futures, it goes for like all 24 hours. So, I guess this is not going to make it, right? I guess this is not going to make it. We're not going to end up closing above that line just ever so slightly, right? 75% of the time you end the day above that line, and we just reached just below that on the probability. Just below that. Man, doesn't it suck when you have such a small drawdown? But again, when it comes down to probabilities, this implies, if you take trades that have probabilities of winning or losing 70-80% of the time, that implies you're going to lose, or your trades will start costing you money 20 to 30% of the time. That's just what's implied. But this isn't a particularly big cost. right? It's not like this has been a huge fail, so still a loss. I'm gonna go ahead and put this at 0, and I don't know if this was my forecast for today or yesterday, so I'm just gonna put it like this. And if it's the other way around, if I actually made an S&P forecast that 1, then I'll go ahead and put a 1 there. But right now, streak is 0. Uh, dollar yen. We also made a forecast. We made a forecast on dollar yen, and that one also didn't plan out because I was expecting the dollar to hold up, right? So we were right on the day before, and I know that much. So this is 1 win, 1 loss. There you go. Ooh, yeah. But man, so we got euro right, and then we got ES and dollar yen wrong. Man, 2 out of 3, not so great, but on a day-to-day basis, okay. Okie doke. However, on the day before, I got all 3 right, which was kind of crazy. So I went from getting all 3 right to just getting 1 out of 3. Um, well, that's the fastest way to humble yourself. Fastest way to humble yourself. And it's a good example of why, when it comes down to day trading stuff and odds, even if your odds are, 70, 80%, if you're going to be trading every day, there's a lot of noise in daily data. And that noise will whipsaw you, that noise will go against you. You'd never bet the house on any one trade. You always make sure you have ammo in the tank so you can trade long enough to fulfill your long-term expected value. And when you're able to trade for long and long and long periods of time, and you're trading with positive expected value, right? You're trading with something that wins 70, 80% of the time, works out 70, 80% of the time, and you're looking at research and outlooks and talking to other traders, and you have a general idea of what expectations are based off what the data is, you'll be able to do a lot of good risk management from outside the chart, from your strategy in the chart. And logically it makes sense that, yeah, someone who does those things is more likely than not to, over the long term, if they're consistently applying those things, to make money in the long run. It's just a matter of consistently applying those things, constantly learning new things, figuring out risks, frankly, figuring out risks that they weren't paying attention to before or weren't modeling before, right? There's so much you can do to improve your trading over time that can get you to that positive expected value. And if you're just going to bet the whole house on 1 or 2 trades, and you want to leave like a few dozen trades in the tank, right? You don't want to do all your trades. Like, you don't want to just do 5 trades in your life, right? So the problem is that with guys who have small accounts, right? If you got a small account, your trades are going to be teensy teensy tiny, and your profits and losses are going to be teensy teensy tiny. And that's not super motivating, right? But if you don't learn those good habits when you have a relatively smaller account, then when you actually do have a larger account, you're not, and you want to take trading, very professionally, you're not going to have the habits or the skills or the behaviors necessary to exercise and realize that long-term positive expected value. So if you don't trade according to a way that gets you that positive EV over a long time, you're not going to get that positive EV. right? And until you realize what you're doing that's getting in your way, the things that are causing you to go against your strategy, or the things that actually are very negative EV over time, right? Then you're going to constantly be in this state of net capital, and you'll perpetually be in this intermediate stage of being a retail trader where you're just floundering around, either with the same account balance or losing money, right? Or making just a little bit of money for a few months, and then it feels like you've reset back to zero, right? There's all sorts of ways you can get, you know, you can improve yourself from that point. It's just it's different for a lot of people, but there's a few commonalities, and when it comes down to those commonalities, um, man, I personally think a lot of it just comes down to not actually understanding the risks that you're taking. That's it. Like, I can go here and I can look at my probabilities, and I'm like, okay, let me position my account this way. Let me go ahead and take like 5 or 6 trades against, 5 or 6 assets, where all the probabilities are at least 60, 70, 80% of the time I win, and then I'm diversifying my risk based off maybe what I feel like I have the most confidence in. And then I'm using a ramp up in my position sizing. So I start with small positions when I initially put the position on. And then as the trade continues to work out and be profitable, I ramp up the position sizing as my confidence improves and as the market agrees with that initial direction that I selected. I mean, probably one of the easiest ways to improve is just in position sizing. Instead of putting like 1% of your account on every trade, uh, the next best thing is doing an equally weighted thing, right? Where you break up that 1% allocation to a trade over time in equal parts. So let's say you want to enter dollar yen over the span of a week. What you're going to do is, okay, on the market open, you put in 0.25, 25 basis points of that 1%. And then on Tuesday, you put in 25 basis points, right? So you're spreading out your entries over time. And as if the market's going to continue to agree with whatever bias, long or short, you decided, then continue putting on more risk, right? And the other flip side of it is, if the market really moves quickly in your direction, then those smaller position sizes, you're going to be able to move those stops up pretty aggressively, or you'll be able to just take profits. Now, I have a slightly different way of doing that. I still like to break up my positions, right? But I do a weighted positioning. So I start with a small position size of like 0.2 if we're using that 1% analogy. I'll use 20 basis points for the first trade, and then I'll use 30 basis points for the next trade. And what that'll do is it'll bring my net position closer to the most recent spot where I entered. Because in the event where there's a bit of drawdown from my first position, but I still have confidence and good probabilities that my trade's going to work out, I still have a lot of ammo, and I'm putting in more significant sizes of my position at more attractive prices compared to, to take advantage of the bias that I'm trying to trade. And then if things are really taking off, and whatever event catalyst I'm looking at or whatever price threshold I'm looking at takes off, then the last thing I'll do to hit that maximum 1% allocation is put on the final 50 basis points, right? Because 20 basis points plus 30 basis points is 50, which is half of 1%. And then I have 50 basis points remaining of that 1%. All right, once things have really started to take off, I'll put on that final 50 basis points and be fully allocated to something I have a lot of confidence in. And that's how I like to approach my entries over time. Now, I may span that out over a whole week. I may span that out over like 3 or 4 days or even 2 days, right? But the point is that I spread it out over time because there's always the likelihood that I'm wrong in about 4 hours from now or 12 hours from now or 24 hours from now, right? You always want to leave room for being wrong, right? So you always got to ask yourself, how much am I willing to lose? How much of more or less? You just want to focus on how much a trade is going to cost you. And the more you focus on not putting on trades that are going to cost you arms and legs and houses, right? Then, and being frankly just a bit more conservative, right, with the position sizing and the risk management, right, based off probabilities, over the long term, that'll more than likely transform into positive EV. Let's see, is there any other asset here that I wanted to go over? No, I still have the macro plan highlight video that I'm working on. I'm currently downloading it off YouTube as the live stream is going. And from there, I'm going to do that editing. But in the meantime, while that downloads, I'm going to be doing a video on this yield spread indicator. You can see that the yield spreads actually started to tick down here. That is interesting. The yield spreads are still overall super positive, but you can see this is kind of, you go a bit sideways. So this is kind of giving me a slightly sideways outlook right now on the dollar yen. Let me go ahead and cover like some cross pair. How about pound yen? I don't really look at pound stuff all that too often. Oh my god. Look at this. The yield spreads are just super positive. It's just been on this rip-roaring uptrend. Let's look at it on a 1 hour. Oh, wow. Yeah. You could probably close up here, or you can probably close somewhere in this general vicinity right around here. Yeah, roughly 80% of the time you will end the trading day above 172.6. But that's like 90 pips from where we're at right now. Yeah, I don't think that we've topped out for the day quite yet, so I'd at least anticipate that our high comes in a bit higher. All right. So I'd expect us to at least at some point be trading 20 to 60 pips higher. I mean, just somewhere above this line, I'm expecting the high to come in. Now, don't get me wrong, it's like 67% of the time, you're going to probably get your high somewhere above 173.89 here on pound yen. So you get your high very frequently up in this area. And I mean, for all intents and purposes, I could go with that more aggressive expectation. So let's do that. That the high for today is right around 173.89 or above that level. Let's go with that. That's a more reasonable forecast to be putting out there. Because there's actually some risk that we don't go above there, and I'm wrong, right? So let's see. Let's see how it plays out. Maybe we just pop up a little bit more. There's always the risk that you just pop up to around 173.7 or zero point 0.8 and you top out in this kind of 10 pip-ish range right here. And I could draw that too. So if I go red and red, text coordinates 7 and 8. So topping out somewhere here, or you're getting your high somewhere above here. That's kind of what I'm anticipating for today as far as pound yen goes. And again, based off how things are looking over the long term, I don't know. I still think going back to maybe 174 is still very, 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 very much in the cards to occur today. All right. Well, with that all done, we've been going now for roughly 30-ish minutes. Thank you guys for watching. I'll see you all in the Discord if you want to be in there. Link to that's in the description. If you want access to these indicators, link to that in the trading group because you get access to all these indicators and the trading group when you buy them. And the link to that is also in the description. And I'll see you guys tomorrow. And we're getting closer and closer and closer to some major macroeconomic events where I'll probably have to stream much earlier in the morning in order to trade those events live with you guys. Okie doke. I'll see you guys for tomorrow's daily plan in a bit.